Hey, what's going on, people on Facebook and YouTube? So listen, let's talk about credit. So today we're going to talk about, because there's a lot of question when it comes to rebuilding credit, right? So a lot of people are talking about whether they should get a prepaid credit card or a secure credit card to build or to rebuild their credit. So that's what we're going to talk about it today, because there's a lot of lenders that are out there that are giving out false information in terms of prepaid credit card and secure credit card for people that are trying to rebuild their credit. So that's what we're going to talk about. All right. So let's get into it. All right. Let me see if I can put my intro video here, because I got a little intro video. Let me see here. All right. There's the intro video. Is it going to work? No. So it looks like it's not going to work. But anyways, listen. We're going to talk about rebuilding your credit. So if you are in the process where you're trying to rebuild your credit, you got to stay away from prepaid credit card, because a prepaid credit card does not help build your credit. Let me repeat that. A prepaid credit card will not help rebuild or even build your credit. Why? Because a prepaid credit card does not report to the credit bureau. So Equifax and TransUnion. There's a lot of companies that are offering prepaid credit cards, right? Especially there's a lot of financial financial companies that are offering prepaid credit cards. So if you are in a position where you're trying to rebuild your credit, you got to stay away from prepaid credit card, because prepaid credit cards, they do not report to the credit bureau. Remember, there's two credit bureaus in Canada, Equifax and TransUnion. If that prepaid credit card is not reporting to the credit bureau, then it means that it's not helping to rebuild or to build your credit. So that's what we're going to talk about today, right? Because prepaid credit card versus secure credit card, because a lot of people that are in the phase where they're rebuilding their credit, meaning that, their credit has been damaged because of some negative information from the past, whether it's late payment, collection account, or charge off. Now they're in a process where they need to rebuild their credit. They can't get an unsecured credit card from their financial institution. They can't get an unsecured credit card is usually when, a bank, when you go to your financial institution, they will not require you to put any collateral. So that's why you call it an unsecured credit card. So a lot of people that are in that position, they're trying to rebuild their credit, right? But there is a lot of information in terms of people are telling, there's, organization that will tell you that, for you to get a prepaid credit card, because it's the easiest way to get it. But a prepaid credit card will not help to rebuild your credit, because a prepaid credit card does not report. So a lot of the lenders that provide a prepaid credit card, they do not report your payment history to the credit bureau. So if you are in a position where you are trying to rebuild your credit, you got to stay away from prepaid credit card, right? Because it does not help to rebuild your credit, because prepaid credit card, even though it's the same as a credit card, as a secure credit card where you put money in it, right? And then you can use it to make purchases online, but it's not good to rebuild your credit score or your credit rating. So if you're in a situation or you're in a position where you need to rebuild your credit, you got to stay away from a prepaid credit card, because it will not help you to rebuild your credit score or your credit profile, your credit rating, right? Because that's what we are about. This channel, this platform is about helping you, giving you the information, the education to help you transition from, subprime credit rating to prime credit rating, right? So nowadays they don't call it poor credit anymore; they call it subprime. So when you hear a financial institution tells you that you have your credit score is subprime, it means that you have a poor credit score, you have a bad credit score, right? But it's no longer, it's no longer politically correct to say poor credit. They just call it subprime credit, right? So if you hear somebody say that you have a subprime credit rating, it means that you have a poor credit score or you have a poor credit rating. So that's what this channel is all about. So here, my credit funding, right? This is what we talk about. We talk about personal credit, business model, and digital marketing, because we want to help you to transition from subprime credit rating to a prime credit rating. Because when you have a subprime credit rating, most of the time, the only options that you have available are the payday loan lenders, right? Are the Cash Money Mart, the easy loan, those are the options that you have now. Sometimes, you might be in a position or in a situation whereby nobody else is willing to lend you money so that you can take care of your, immediate emergency, such as a car payment, or a car that broke down, you need a car to get to work, and other financial institution will not be able to help you because you have a subprime credit right now. If you're not positioned, then, most of the time, right, payday loan lenders are the only options that you have, right? Because they offer quick ways of them giving you funding or money without checking your credit report. So that's why here, my credit funding, we want to help you to transition from subprime credit rating to a prime credit rating, so you can eventually transition out from, from taking those payday loan from lenders. Because remember, payday loan, it's not meant for everyday type of loan. It's something that you do one time and you try to get out of it. But most people, it becomes a trap whereby you get it once and then you realize that you need more of the loan for you to pay, right? So it really becomes a trap if you don't know how to manage funding, or if you don't know how to manage credit wisely. So that's why here at My Credit Funding, as I mentioned, our goal is to help you to transition from a subprime credit rating to a prime credit rating. So we do that by education, we do that by information, we do that by knowledge, and we do that by providing you with the information that you need, so you can prepare, so you can equip yourself, so you can get the knowledge, so you can know how to improve and how to optimize and position your credit, so you can get out of that subprime credit rating and and get into a prime credit rating, where you can now have that relationship with your financial institution. So that's what we're talking about. We're talking about prepaid credit card versus secure credit card. Which one is better in terms of helping you rebuild your credit? So the verdict is this: prepaid credit card is not good for rebuilding your credit. So you want to stay away from that. Stay away from that by any means necessary. If you're in a position where you need to rebuild your credit, do not get a prepaid credit card, because prepaid credit card lenders that provide prepaid credit cards, they do not report that payment to the credit bureau, right? Because when you're rebuilding credit, you need the lender to report those payment, to report your good payment, your on-time payment to the credit bureaus, Equifax and TransUnion. And 100% of the time, prepaid credit card companies that offer that, they don't report your payment history to the credit bureau. Therefore, it is not helping you to rebuild or to reestablish or to build your credit rating, right? So you want to stay away from that. So now, if you have subprime credit rating, right, poor credit rating, and you're not able to get unsecured credit card from financial institutions such as the big banks, right, then you can think about getting a secure credit card, right? So now a secure credit card, the lender will require you to put in a collateral. So a collateral could be, let's say they will require you to put in $50 payment, a security deposit, and then they were going to give you a credit limit. And then based on how you use that credit limit, they can refund back that security deposit, right? So that's what a secured credit card is. The lender will require you to put in a security deposit. So they will require you to put in some cash before they can extend you, or they can give you that credit card, right? So if you are in a situation where you need to rebuild your credit, then that's what you got to do. Now, another thing is this, right? When you are rebuilding your credit, right, the best or the most effective way to rebuild credit is through credit card. So credit card is the most effective way to build it. So that's why you want to get yourself, if you're in a position whereby you're rebuilding, right? Because remember, it's all about using credit responsibly. If you've messed up credit in the past, that's why you got to get the information now, so you can use it responsibly. So moving forward, you know how to use it, right? So that's why if you're in that subprime credit rating, right, then secure credit will kind of help you to rebuild credit in the long term, right? Well, in the short term and in the long term. Why? Because you see, when it comes to credit, remember, you got to know, well, most people, especially if you're in Canada, most of us, we do not know what our FICO score is, right? We have to depend on the banks to tell us what our FICO score is. Now, according to FICO, right? So FICO is the 3-digit credit score that most lenders use in Canada, right? Or in North America. Now, in Canada, the FICO score ranges from 300 to 900, right? Now, here's one thing you got to know. There's different types of credit score, right? You don't just have one credit score. There's different types of credit score. Like you see here, you have what's known as an auto credit score. So when you're applying for a car loan, a car, there's a auto credit score that they will look at, right? And then you have your bank card credit score. So this is for your credit cards, your lines of credit, right? And then you have, other other score that they use for, for mortgages. There's different types of credit score. That's what you got to remember. There's not just one credit score. You don't have one credit score. You have many different types of credit score, depending on what it is that you're applying for. If it's for auto loan, right? So as you can see here, right, Version using an auto lending. So in auto lending, they will use your auto score 8, right? So this is for, and then if it's for for credit cards, lines of credit, and so on. So then they will use your bank score, and then there is also different types of score when it comes to mortgage lending. So there is different versions of score. So there's not just one score that you have, right? There is variation of the score. There's different depending on the product that you're applying for, as you can see here, right? This is from FICO, right? They will, you have your auto lending credit score, you have your regular credit card and lines of credit score, and then you have your mortgage credit score. So you have different types of credit score. Right now, here's the thing: when you are building credit, right, when you're in the process of building credit, the most effective way to build credit is through a credit card. Right now, a loan will not help you build credit in the short term. What you really need to do is you need to get you a secured credit card if you're in that position. If you are, or even an unsecured credit card, you want to stay away from loans in the beginning, because as you can see here, loans do not help you build credit in the short term, right? It might help you build credit in the long term, right? Maybe 7-10 years from now. But in the short term, it does not help. Why? Because according to FICO, right? Because FICO looks at your utilization, how you're using your credit card. That's how they're able to increase. That's how they're able to measure your credit score, right? As you can see here, you see high credit card usage, right? Through all FICO score version, considering high credit card utilization to be reflective of higher risk. FICO score 8 is more sensitive to highly utilized credit cards. So if a credit report shows a high balance close to card's limit, FICO score 8 will likely be more impacted by a previous score. So the FICO score system, it looks at your, I didn't even bring that. Okay, let me bring that up again so you can see it. Okay, here it is right here. Right. So the FICO score system, they put more emphasis on credit card, especially when you're building credit in the beginning, right? Credit card is what they use to measure your credit score in the beginning, because they look at your utilization, how you're utilizing that credit card in terms of usage, right? So when the credit limit is too high, then your credit score will go down. When the credit limit when your balances are low, then your credit score will go up. So if you're looking to build credit in the short term, then that's what you got to do. You got to get you a secured or an unsecured credit card and start using it wisely in terms of using it and paying it off, because the FICO system, that's how they're able to monitor, or that's how they're able to measure your credit, your credit behavior. And usually a credit card is weighed heavily than an installment loan, right? So stay away from a loan in the beginning, right? Because there's a lot of companies there that will offer you a loan telling you that, a loan will help you build credit. No, a loan will not help you build credit. It is credit card, right? It's how you use your credit card, because according to the FICO system, as you can see here, right, they put more emphasis on credit card utilization. Now, when you get a loan, most of the time, when you start off with an installment loan, there's no utilization. There's a fixed payment. So every month you got to make a payment on that loan for, let's say, 12 months, right? For that 12 month, you have a fixed payment. So therefore, they're not able to monitor the utilization on that loan, because the utilization is fixed. Usually with a loan, you start up with 100% utilization, and until you pay that loan off, that's when the utilization goes down. So that's the long way to actually build credit. Because if you have, let's say the loan is for 36 months, or if it's if it's a 7-year term, you gotta pay it down. And then usually, with the way the credit score system works, is that if you end up paying your loan too early, they actually penalize you. So that's why you want to if you're in the beginning, if you have poor credit, if you're in a subprime credit rating, then you want to be able to use credit card to build your credit score up, or to build your credit rating, right? So stay away from the loans, right? Because a lot of lenders, they're offering loans to help build your credit. No, it's not going to build your credit. It is a credit card that usually builds your credit in the beginning, right? But you got to use it wisely. You got to use it and pay it off, right? Monitor, make sure you're not using too much of your available credit, or you're not overspending on it, right? You use it and you pay it off. You use it and you pay it off. So that way, because as you can see here, the FICO system, they weigh heavily on, credit card usage, right? Because remember, as I said, there's different credit scoring system. Credit score. You don't just have one credit score. There's FICO 8, there's FICO, FICO 9, and now there's actually FICO 10 that's coming up. So you have different variation of credit score. You have credit score for auto lending, you have credit score for credit card, right? This is the bank. This is, as you can see here, version used for in credit card, right? And they use the bank card score 8, and then there's versions for mortgage lending, and then there's version for auto lending. So there's different credit score. Now when it comes to credit card, right, this is what they use. They use the bank score 8, right? And if you go down, if I show you here, right, and the bank score 8, they put a lot of emphasis on credit utilization, right? So therefore, when you're building your credit in the beginning, it's a credit card that will help you build credit in the short term. So if you're in a position where you're trying to build your credit, do not go for a prepaid credit card. As I mentioned, prepaid credit card do not help build credit because they do not report to the credit bureaus, Equifax and TransUnion. And installment loans also don't help to build credit in the beginning, right? Because an installment loan, it's, usually, the amount is fixed and, the term is fixed. You start off with 100% utilization, right? But as you saw here with the FICO system, the way it's designed is they weigh heavily, they look more, when it comes to building your credit, they put more emphasis on credit card than installment loans or even lines of credit. So if you are trying to rebuild your credit in the beginning, right, if you are trying to, transition from subprime credit rating to a prime credit rating, then you got to go get you an unsecured or a secure credit card, right? So if you are, if you've had bad credit in the past and you want to rebuild it and you're not able to get a secure credit card from your bank or from your financial institution, then go get you a secure credit card so that way you can start rebuilding your credit. And usually it takes about, especially if you're new to credit, right? If you don't have any credit score in the credit system, it takes about 6 months for the credit bureau to generate a score for you, right? And then after 12 months of payment, you should have a credit score, right? So listen, that's how you build credit. So as I mentioned, if you are building credit, you got to stay away from the prepaid credit card. Anything that says prepaid credit card on it, stay away from it because it does not help you build credit, right? The only, you want to get a secure credit card or an unsecured credit card, and also stay away from the loans, right? The installment loans, they do not help you build credit cards. So any institution out there that tells you that, oh, you know what, if you get this loan, it's going to help you build credit. No, it's not going to help you build credit. It's going to, because as you can see here, the FICO system, they put more emphasis on credit card usage than loans, right? Because with a credit card, they're able to monitor your credit utilization. So every time you use your credit, you pay it off. Every time you use it, you pay it off. Your credit score should be going up, right? So that's why you want to stay away from the loans and go for the credit cards in the beginning to build your credit, because that's how the FICO system works. Because remember, the FICO system is what all lenders in North America use to make credit decision, right? And as you saw here, you have different types of credit score. You don't just have one credit score. There's different types of credit score, right? You have your credit score for auto lending, right? You have credit score for your, credit cards, and then you have credit score for your mortgage lending and so on. So there's different types of credit score. So if you're trying to rebuild your credit, right, then you want to go with a credit card, because a credit card is what they use in FICO 8, right? So as you can see here, this is, the version used in credit card is the bank card score 8. So that's what they use, and they put more emphasis on your credit card usage. So your credit card usage, meaning that, right, use it and pay it off. Use it and pay it off. Don't max out your credit card. Use it responsibly and then pay it off immediately, so that way you can rebuild your credit profile. So that is the mission here. We want to help you to transition from subprime credit rating to a prime credit rating, so that way you can get the best interest rate and the best product from your financial institution. Because for as long as you stay in that subprime credit rating, the only options that you're going to have available is the payday loan lenders. Now, with a lot of people, there's a lot of bad experience. So there's a lot of bad stories with people having bad experience with payday loan lenders, because when you have poor credit history, that's the only option that you have. It's the quickest option. It's the fastest option, but does not help you build credit, right? Payday loan lenders don't help you build credit. Their prepaid credit cards don't help you build credit. Their installment loans don't help you build credit, because most people that get payday loan lender is because they either had bad credit and they're trying to rebuild their credit. But a lot of these lenders, they do not give you the actual information for you to rebuild your credit. So that's why you want to be able to transition out from subprime credit rating to a prime credit rating. And the most effective way to do it is you got to go get you a secure credit card or an unsecured credit card and use that secure credit card wisely. Use it and pay it off. Use it and pay it off. Do not max out your credit card. Don't miss any payment, right? Make sure you're on top of your payment so you can rebuild, because as you can see here with the FICO system, that's what they put more emphasis on credit card utilization, right? So if your credit card utilization is too high, then your credit score is going to go down. If your credit card utilization is low, or if your balances are low, then your credit score is going to go high, right? So that's how you build your credit in the long term. All right, listen. So I wanted to keep it short, right? So it's already 20 minutes. All right, so listen, I'm out. I'm going to see you all in the next video. And as I mentioned, that is our goal here, is to really help people that have poor credit, right? That are subprime. That's the new word. You gotta, it's called subprime credit rating. That's what you're gonna be hearing, right? They don't call it poor credit anymore. They call it subprime credit rating. A lot of people that have subprime credit rating are people that are, the credit score is below 600, right? Or the credit report is just, there's too much negative information, late payment, collection account. So that's what we're here to do. We're here to help you by giving you the information, the education, and the knowledge for you to transition out of subprime credit rating to a prime credit rating. All right. So listen, I'm out. Until then, I want to see you all on the next video.